Welcome to Silent Stacks. Here we focus on silently stacking the bag while navigating uncertainty in real time. Welcome to my channel. I post 3 videos per month, one on the 8th, one on the 17th, and one on the 26th of each month. If you find value in my work, feel free to like the video and subscribe to the channel. Let's dive right in. All right, so here we have the Bitcoin chart. We are in an awkward spot here for Bitcoin. The short-term level for bulls to hold would be 64K, which we are right now. But today is FOMC day. We have the FOMC today at 2 p.m. So it's going to be a volatile day. I am going to sit on my hands and see what the market will reveal to us. Let's take a look at Ethereum. Ethereum did print the prepare to buy on June 9. So the next signal that I'm waiting for is a buy on Ethereum. In my last video, I did mention that these daily buys do not happen often. So when it prints, I will be taking it seriously. So we had some over here, we rallied. We had some over here, we rallied. We have one over here, we rallied. And we should be getting one in about 30 to 45 days from the prepare to buy signal. So that puts us around July 9 to July 24, more or less, for a buy signal. And then if we get a daily buy, then I will be building a DeFi position on Ethereum to generate yields on my Ethereum. And I will hold the position for about 1 to 2 years. That is a plan. Let's review Ethereum versus Bitcoin. This is what I'm seeing. I'm seeing a potential Adam and Eve pattern. So we have a sharp recovery here. And then if this is a Adam and Eve pattern, this will be a slow correction. And then once we start to get the curvature, then we could start targeting the break of structure. And once Ethereum floors against Bitcoin and Ethereum starts to rise against Bitcoin, it means Ethereum will outperform Bitcoin. So I am seeing a potential 100% move that Ethereum will climb against Bitcoin. And that will be very good for Ethereum and altcoin as well. And usually Ethereum is the one that leads the altcoins. So that's one thing I'm monitoring here. The posture looks good, but we do have some time. So I wish I could say more, but the patterns are still developing. And now we require patience to see what kind of structures these charts reveal to us. Let's look at the XRP chart. So in my previous video, I mentioned I am waiting for the formation of this monthly demand. And the next thing to wait for is for this month to close. So we still have 13 days. And then once this month closes, the next candle eventually needs to make its way to the top of the demand. And once it makes its way to the top of demand, we can start to assume that this could be a solid demand for us to accumulate heavier with more confidence. So we need patience to see where this month will close. Bitcoin does look like it's forming a double bottom. We will also need to see where this month decides to close. We have 13 days. And I want to bring up the blue moon concept again. Every time a blue moon occurred, an interesting pattern happened. And this one's reminding me of a blue moon in the past, which I'm going to reveal to you here. So this blue icon is the blue moon. And I want you to take a look at the times that Bitcoin had other blue moons. We had one over here. And then Bitcoin rallied 400% after that. We had one over here. Bitcoin rallied 200, 300, 400% as well. I want to bring your attention to this one right here. So we had the blue moon right here, and then Bitcoin dumped, creating a double bottom, and then it was up only from that point on. So this is something that I'm monitoring. I'm not saying this is my main analysis, but this is something that is definitely in the back of my head. Because usually when these blue moons occur, it turns out to be bullish for Bitcoin. The only ones that didn't occur is right here. We had a sequence of 2 blue moons pretty close to each other. And this was during the bear market. The difference with these sequence of blue moons is that it was during a lunar eclipse phase, which tends to be bearish. And all the other ones tends to be closer to a solar eclipse phase, or when the lunar eclipse phase is about to end. And I found this interesting because this one tends to be the same one, because here we are in the midst of the lunar eclipse. This was the last lunar eclipse right here. And we had the blue moon right before. And then since we were in the lunar energy still, we had the double bottom, but eventually held. And then this was the last lunar eclipse of the lunar phase. And then Bitcoin rallied to the first solar eclipse. And here we are, similar pattern. This was the last total lunar eclipse on March 3rd, and eventually a few months later we had the blue moon, and then we had a crash, and here we are potentially doing a double bottom. So we will have to see where this month decides to close. And the levels for bulls to hold would be 64. So anything below 64 gets a little sketchy towards the lower levels. But if bulls could defend the 64, then it's looking pretty good for a double bottom. I do have this level marked just in case. It's anywhere from 50 to 40. Some reputable traders are calling for this level, but I will not be waiting for this level. I still say it is a good time to start dollar cost averaging, not financial advice, and that's what I'm doing. Because there's a chance that we won't even get this. All right, so before I wrap the video, I want to mention the S&P 500. So pulling up the silent stacks indicator on the 4-hour time frame, there is some sell signals forming. So this got my attention. I'm going to zoom out to the monthly. All right, so this is a better chart. This is the SPY. They move together. So these are the two levels that I'm monitoring. This white box here, and then this white box here. This is a fib level. I got it from this pivot high over here to this pivot low, and that's where I got these two white boxes. So usually in my experience of chart analysis, I never see any chart go beyond the second box. And the fact that it's been trading above here for so long, to me screams that this is very, very overextended. We are all probably familiar with this chart already. So this is the best time to buy, best time to sell. So if you look at the B over here, years of good times, high prices, and the time to sell stocks and values of all kinds, we have 2026 over here. So I marked some of these dates on the SPY, which is this red line over here. And if you look at 1999, I marked it over here, 1999. Market rallied a little bit more, but eventually corrected for about 4 years. And then I marked 2007, which is over here. It did the same thing. Had a little bit of a rally, and then it had a sharp correction that lasted months. And then this one is the outlier. So the next one after is 2016. I marked 2016, and this one continued to go up. So one thing that I believe in is that if a move does not play out, then eventually the market will balance itself. And my theory is that this is the time. So since we didn't get a correction in 2016 and it was up only, this tells me that the stock market is extremely propped up. Yes, they could keep propping it up to an irrational level, but my theory is that since this one did not play out, then this one could lead to a pretty dramatic crash. And that's what I'm speculating on. So not only are we extremely overextended from the second fib zone, but we're still propped up from 2016. So I think this balance will be a balancing act of that could lead to a pretty bad market crash in the stock market. And I marked some other lines using this chart. And based on this analysis, if we start to correct, that I am seeing a buy for the SPY and the S&P 500 around 2029 to 2030. So if you look at these white lines that I marked, this was good buy over here. This one was a good buy over here. And even after 2016, this was a good buy over here. So we had a crash. If you bought that, it was up only from there. So I am cautious with the SPY. I'm cautious with the S&P 500. And I will be interested in looking at opportunities with the SPY and S&P 500 around 2029 to 2030. So that is the macro view. And the next level that I'm monitoring is going to be the 600 on the SPY and about 6,000 on the S&P 500. Because anything above 6,000 is extremely propped up. And because of that macro view, I am interested in this short-term signals from the silent stacks indicator. The level that I'm watching is all the way down here, around 6,000. So that's about a 16% correction for the SPY and the S&P 500. I am building a short position on Hyperliquid. If you want a no KYC crypto exchange to short this asset, you can do so at Hyperliquid. You can find the link over here in my bio. Go to the main page of my YouTube channel, go to more links, and then click where I trade. And you can use this link right here to save on fees. This is not financial advice. This is what I'm doing. I'm seeing the opportunity in shorting the S&P 500. This is my hedge against my crypto exposure. And if you have any questions on the Silent Stacks indicator. You can check it out at silentstacks.xyz. So to recap, Bitcoin is in a tricky spot. We could be forming a double bottom, but we are in the last few days of the accumulation, and the last few days of accumulation could also lead to capitulation. I would not be waiting on that. I think this is a good time to start dollar cost averaging. I will be monitoring the monthly close. If bulls could hold 64K, we are looking good. But if not, then we need to prepare for one last capitulation. But we are getting close to the end of the bear market, not financial advice. I am waiting for the Ethereum buy signal. I am waiting for the confirmation of the monthly demand on XRP. I hope you enjoyed this video. If you found value, make sure you like the video. I post 3 videos per month, one on the 8th, one on the 17th, and one on the 26th of each month. If you like my work, make sure you subscribe and stay tuned. You can also follow me on X at 24/7stacks for quicker updates. I am growing this account. You are in the right place at the right time. Until next time, take care.